Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at one interesting pattern formation named as inverse head and shoulders pattern. This is the inverse, as you can guess from the name of this pattern itself, of a very well known indicator, very well known pattern recognition named as head and shoulder, which I showed to you in yesterday's session. I gave you some of the examples to explain its concept and its utility to figure out the trading opportunities. Now, for today, our job is quite simple. We just have to invert the prior formation and see how we can utilize to look for the instances where the market is reversing from bearish to bullish. So we can get the trading opportunities with good enough risk reward ratio and also higher probability of making money. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. This is the chart of the AUD USD. Let me change it to the most commonly traded instrument, that is Euro USD. To find this formation, all you have to do is a quick search, or else you can take F3 option, also add indicator. If you type in inverse head and shoulders pattern, here it comes. All right. Now this is not going to form too frequently because we have chosen hourly as our candle period. So on this timeline, it will be forming maybe once a couple of weeks or so. Let us see when it had recently formed. All right, no luck so far. We are in February, that is last month. It looks like there was no reversal of that kind, head and shoulders. No, we are back in December of last year. Still, I think I will have to change the time frame. Let's try out different time frame, maybe 5 minutes. All right, here it comes. So this is one such instance of head and shoulders where these two highs out of these two lows out of these three lows are around the same levels and higher compared to the middle low. So this is, if we look at it, it is going to look as a inverted head and shoulders. So these two are shoulders and this is the head just in a inverted fashion. This is a 3 point formation which requires these two lows to be slightly higher compared to this middle low, which needs to be the lowest of all these three lows, and then the price needs the confirmation of again rising beyond these horizontally drawn line, which is drawn simply using these recently formed highs, swing highs. So those highs are joined to get us these horizontal level, and when the price moves beyond that, this formation is complete. Now this is a bearish to bullish reversal pattern. So after this pattern forms on the chart, you start looking for the opportunities to go long. In this case, the price didn't really hold much ground, even though we got this head and shoulder formation. We saw that immediately after this formation was completed on the chart, the price again started to dip on the lower side, and right now it is even trading below this immediate swing low, the lowest point of this inverse head and shoulder formation. So that means in this instance, you would have been in a loss if you had initiated the trade anywhere around these levels while keeping the immediate swing low, this low as a stop loss point, or if you had provided some buffer, maybe depending on the amount of buffer, this trade might have been still on the account, or it might have gone on to hit the stop loss. So in this case, we are not seeing this formation giving us a trade which would make money. Let us look for other examples. Of course, not all the time the trade is going to end up in profit. Sometimes the trade is indeed going to end up in loss. So in this kind of scenario, all we can do is to try to minimize the losses. So whenever these kind of scenarios develop where the formation is unable to give us profitable trades, all we can do is try to minimize the possible losses. Again, we are running into difficulty locating these formation on these lower time frame also. There is not a commonly occurring formation, and because of that we will have to keep looking and see when it had formed last time around. This is a simple formation. It tries to round out the prices. So three lows are taken into consideration, and if the price is reversing thrice from around similar levels, with the immediate swing low being higher than this prior low, that is indicative of the bulls starting to get the upper hand as this prior decline with the formation of lower lows starts to reverse and we get this higher low in place. So there is additional confirmation of the buyers starting to gain upper hand. Now in this case, we saw that the price go went on to rise above this horizontal line, which is drawn simply by joining these recent highs, and then it was able to sustain around those levels for a good amount of time. And if we had gone on for this trade, then that trade would have indeed brought us good amount of profit. So in this scenario, the trade would have been a profitable trade. While in today's trading session, if you had taken the trade with formation of inverse head and shoulder, then that would have ended up in loss. So in this case, it would have been a profitable trade. So in this kind of scenario, whenever you encounter this formation on the chart, you have to try to optimize your entry point so as to ensure that in the eventuality of you being on the wrong side of these price developments, if the trade actually ends up in loss, the losses have to be to some extent at least minimized. So I would say that our entry should be as close as possible to this immediate swing low while keeping the stop loss closer to or just slightly below this low, middle low formed of these head and shoulder formation. Let's try out some other timeline, the candle period, to see how things will shape up whenever we increase the candle period of these chart, and higher time frame is used for finding the opportunities to trade with. In this scenario, even though the 15-minute candle period is used, we still have the formation which is almost similar to what it was on the 5-minute timeline. So same lows and highs have been used to form this inverse head and shoulder formation where these two lows are around the same levels and higher than this middle low, which is the lowest of all these three lows, and then the price reverses course and it is able to hold the ground for a good enough amount of time, and then it goes on to rise from those levels. So you would have been in a profit making territory if you had initiated the trade using these head and shoulder, sorry, inverse head and shoulder formation. Now, again, we come back to today's trading session. All right, on 15-minute chart, it is not being recognized. If I shift to 5 minutes, then it will be recognized. On the hourly, we saw that it is not really taking shape that frequently. Let us change the instrument and see if there was any inverse head and shoulder formation in the USD JPY on the hourly time frame, and not really. In last 2 to 3 months, no single instance of the inverse head and shoulder formation on the hourly candle spread. That is quite interesting development. All right, we got it here. That is way back in October where we saw these price reversing course from 143.6 and going on to make a inverse head and shoulder formation. Then the price did hold the ground around this immediate swing low. So if you had initiated the trade, then it would have gone on to give you significant amount of profit as it continued to rise higher and higher, and it eventually went on to rise one beyond even 150. So that was a quite a remarkable bull run. So once in a while, this setup will generate some trades, and then the trade can end up in profit or end up in loss. So all you have to do is, if the trade indeed goes in profit, then you have to try to extract the maximum possible profit out of it. And if it is going to end up in loss, all you can do is try to minimize the losses with optimum risk reward ratio and all these technical skills. There is nothing we can do in terms of editing its input. It is simply going to take into consideration the price formation. All we can vary is this candle period. You can go for lower time frames for the candle period. If you are an intraday trader, you can increase the candle period. If you are a swing trader or investor, so depending on your time horizon, you can opt for different candle periods, and accordingly the inverse head and shoulder formation will be recognized on the chart, giving you the opportunities to trade with. And beyond that, there is nothing we can do in terms of editing. So that's all from my side for today's session of JForex Indicators Explained, where we saw these inverse head and shoulder pattern, its concept, its uses, some of the representative examples, and how we can try to look for the trades using this formation, which is not a frequent formation. It is going to form once in a while, so you will have to be careful when it forms and then try to exploit the situation to your advantage. So I am signing off for the day now with another one such instance for you to look at, with this inverse head and shoulder formation, giving you a entry point around 131, and then the USD JPY eventually went on to rise close to 133. So this was also quite a remarkable trading opportunity generated by this formation. That's all from my side for today's session of JForex Indicators Explained. I will be back in the next session with a new pattern to discuss and new formation to look at. See you next time around. Till then, goodbye.